This is the Scrap Metal and Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, October 31st, 2016. Last week, many commodity prices rose, and scrap steel is set to rise this week. U.S. steel production rose for a second week in a row, but still remains well off its high of a few months ago. Oil fell 3% for the week, ending at $49 a barrel. OPEC remains trying to agree on production cuts to get prices up, but there has been no action nor any agreement. If OPEC reduces pumping and prices rise, U.S. production will increase further, which will help keep prices down for years. Oil rigs, major users of steel, fell by 2 this week to 441, the first drop in 4 months. Rigs are still up a huge 40% from the recent lows of 316, but still down a staggering 73% from 2 years ago. The increase in recent months remains very good news for many as drillers go back to work and more steel is used in these rigs. Iron ore rose a big 7% for the week, ending Thursday at $62 a metric ton and up a major 11% for the month, which supports higher scrap and higher finished steel prices. While U.S. scrap steel prices held steady, export prices are up about $15 a gross ton, and importantly, at least in the Southeast, there are now shortages of obsolete scrap steel in some areas. Shortages will help bring higher scrap prices this week as recyclers sell their October material. Hot rolled coil steel dropped to $546 a metric ton in this data, but Nucor announced a $30 a ton increase in rebar prices last week. In the past 3 weeks, we have seen increases in plate, coil, and rebar, all about $30 a ton. Stainless scrap 304 dropped a penny to 31.5 as demand remains steady and the U.S. dollar remains strong. Copper rose a big 10 cents for the week, ending at $2.19, partly on news that the U.S. economy grew the most in the last quarter than in the past 2 years. The 5-year copper chart shows prices are where they were about a year ago, so prices have remained in a range for most of 2016. Importantly, copper inventories have more than doubled in the past 6 months. Double is a very big number, which will help keep downward pressure on copper prices. Aluminum rose 4 cents to 77.7 cents and is up about 20% for the year. But aluminum inventories remain near 5-year lows. With higher prices and less inventory, aluminum production will be increasing, which will increase supply and keep prices from rising much further. Sales of new single-family homes in the U.S. rose 3.1% to a seasonally adjusted annual rate of 593,000 in September, which is the second highest number in about 9 years. Building new homes is a great job creator and helps support higher commodity prices due to the material needed to build a home and the products that people buy to furnish it. Home building remains an enormous part of the economy, so we like to look at the history that shows home sales are currently less than half of what they were in 2007, and looking at the left of this chart, sales today are the same as they were in the 1960s. The shocking data is that today there are 50% more people living in the United States than there were in the 1960s, yet we are still building the same number of homes. There's a big upside here. The Purchasing Manager Index for manufacturing increased to 53.2% in October. Over 50% is growth and 53.2% is the highest number in a year. New business growth was a key driver last month for this high number. U.S. GDP, gross domestic product, grew at an annualized rate of 2.9% in the third quarter, which is the best growth in 2 years, with personal consumption and exports being key drivers for this growth. This is all very positive news. With that, we hope all have a safe and profitable week.